Imagine a single AI data center, right? And it's demanding as much electricity as an entire small city.
Hmm.
Now imagine trying to actually power that massive, totally concentrated demand using an electrical grid that was, fundamentally designed and built back in the 1970s.
Right. Yeah, it's a huge problem.
It really is. I mean, that is the physical bottleneck that's currently threatening to just completely choke the entire artificial intelligence
Oh,
revolution.
absolutely.
Because we're constantly talking about the cloud as if it's this, I don't know, weightless, infinite resource just floating out in the ether. But the physical reality of training these massive AI models is incredibly heavy.
Yeah, heavy and power hungry.
Exactly. And frankly, our energy landscape is just straining under that weight.
It is. I mean, it's the absolute definition of a structural limit.
Right.
We are hitting the absolute ceiling of what local electrical grids can handle simply trying to feed these new hyperscale data centers.
Yeah.
Because you can have, all the advanced semiconductors in the world, but if you cannot plug them in, they're just very expensive paperweights.
They're just fancy space heaters at that point.
Exactly.
And that tension is exactly what we are unpacking in today's deep dive. We're looking at a forward-looking equity research report on a company called Oklo.
Yeah. Fascinating company.
Right. So Oklo is an advanced fission company, and they're building compact, fast reactor technology. Specifically, it's called their Aurora powerhouse.
Hmm.
And we're looking at them because they sit perfectly at this intersection of two massive macroeconomic trends. You've got the explosive, unyielding growth of AI-powered demand, and then on the other side, the global resurgence of nuclear energy as this clean, firm power source.
Yeah, and zooming out for a second, it's really vital to understand why traditional renewables aren't solving this specific problem.
Oh, for sure.
Because, solar and wind, they're crucial to the broader energy transition,
Yeah.
right? But AI data centers, they operate 24 hours a day, 7 days a week.
Right, they never sleep.
Never. They are running complex calculations continuously, so they just cannot handle intermittent power drops when the sun sets or the wind dies down.
Yeah, the AI doesn't just pause because it's cloudy.
Exactly. They require what the utility industry calls firm power,
Mm.
which means electricity that is always on with near perfect reliability, regardless of the weather.
Right. So I like to think of traditional power infrastructure like flying commercial.
Okay.
You have to deal with the public grids infrastructure. You have the layovers of transmission loss as electricity travels hundreds of miles. And you have this like TSA level bureaucracy of local utilities and interconnection queues.
Oh, that's a great analogy.
But Oklo's strategy is like taking a private jet. They're utilizing a behind-the-meter model,
Right.
meaning they want to build these compact nuclear reactors directly on the data center's property, completely bypassing the public grid and all of its associated bottlenecks.
Yeah. And that behind-the-meter approach is technically elegant because it solves the transmission problem. You generate the power exactly where it is consumed.
Right.
But to do that, you need a power plant that is small enough, safe enough, and scalable enough to essentially sit in a corporate backyard.
Which sounds kind of crazy when you think about traditional nuclear plants.
Right, exactly. But that is what Oklo's fast reactor design is attempting to achieve.
Okay, let's unpack this. Because here's the tension that makes this research report so fascinating. If Oklo is building the exact bespoke power solution that this, trillion-dollar AI industry desperately needs, why is the public market punishing them so severely right now?
That's a great question.
Because let's look at the financial reality. Oklo's stock has taken an absolute beating.
Yeah, it has.
It is down 43.6% over the trailing 52 weeks. It's currently trading around $39.69.
Which is a staggering compression in valuation when you consider its 52-week high was pushing $193.
It's a brutal drop. And looking at the technical indicators in the report, I mean, it is sitting below all of its major moving averages. The 20-day, the 50-day, and it's trading almost 42% below its 200-day moving average.
Wow.
Yeah, and the RSI, the Relative Strength Index, is hovering around 43, meaning despite that massive 40% drop, technical traders don't even view this stock as fundamentally oversold yet.
Right.
There's still a market belief it has room to fall.
And yet, if you put a piece of tape over the stock ticker and just examine their balance sheet, you're looking at a completely different company,
Yeah.
a highly fortified one.
Exactly. I mean, they just raised approximately $1.9 billion year to date.
Mm-hmm.
And they did this through an at-the-market or ATM share issuance, which essentially means they've been strategically dripping new shares into the open market to raise capital over time.
Right.
That has boosted their cash on hand to a massive $1.645 billion.
It's a huge war chest.
It is. And they carry almost zero debt, like just $700,000 in long-term debt, which is basically a rounding error at this level of capital.
Oh, absolutely.
And they just booked their first ever revenue, $1.2 million in the first half of 2026.
What's fascinating here is how that pristine balance sheet interacts with their really harsh operating reality.
Right.
Because we have to be clear that $1.2 million in revenue is purely symbolic.
Yeah, it's not actually moving the needle.
No, not at all. It marks a psychological transition from being a pre-revenue startup, but it does not pay the bills.
Yeah.
The real story hiding in those financials is the burn rate. They reported an $81.6 million net loss in just the first half of 2026.
And according to the guidance, that burn rate is about to accelerate dramatically.
It has to. Developing advanced nuclear technology is one of the most capital-intensive endeavors on the planet.
I can imagine.
Yeah, their CapEx, their capital expenditure guidance for 2026, is projected to be between $400 million and $500 million.
Wow. $500 million.
Exactly. And that money isn't going to software, it's going into physical reality. They're transitioning from modeling these reactors on supercomputers to actually procuring specialized steel alloys, hiring nuclear engineers, securing real estate, and locking in supply chains for highly regulated nuclear fuels.
But hold on, even if they burn through $500 million this year in CapEx, that $1.645 billion in cash gives them a runway that stretches for years.
Yes.
They are fully funded through their upcoming critical phases. And the report notes, Truist Securities even maintains a $51 price target on them, which implies significant upside from the current $39 level.
Right.
So I have to ask, if they're fully funded for years to build the exact product AI needs, are investors just being insanely impatient, or is the market seeing a massive red flag that we aren't?
Well, the market is pricing in the ultimate boogeyman of the nuclear industry, which is execution risk.
Okay.
You know, the graveyard of nuclear startups is full of companies that had brilliant physics but terrible financing.
Yep.
Usually, the regulatory reviews and the construction delays drag on for so many years that companies simply run out of money before generating a single commercial watt of power.
Oh, wow.
Yeah, it's known in the industry as the pre-commercialization valley of death.
But Oklo essentially bridged that valley by raising the $1.6 billion, right?
They bridge the immediate financing risk, yes.
Okay.
They don't have to go beg private equity or the public markets for a lifeline at unfavorable terms anytime soon. But having the money to build a reactor doesn't mean you can actually build it.
Right, right.
The market is looking at that $500 million CapEx bill and saying, prove to us that you aren't just an expensive science experiment.
Yeah.
Prove you can navigate the regulatory maze and actually bend metal.
Which makes their recent operational milestone incredibly important,
Absolutely.
because they aren't just publishing theoretical white papers anymore. They actually built something.
Right.
The report notes that Oklo's Groves isotope facility recently reached criticality, and they did it in under 11 months.
And in the context of nuclear development, that 11-month time frame is basically the equivalent of breaking the sound barrier.
I mean, traditional nuclear plants take a decade just to get the environmental permits approved.
Exactly.
So how on earth did they actually build a facility that achieved a self-sustaining nuclear chain reaction, which is what criticality means, right?
Right.
In under a year? Did they find some sort of regulatory loophole, or is the tech just that fundamentally different?
It is a combination of fundamental physics and some really strategic partnerships. So traditional nuclear plants are light water reactors.
Okay.
They operate at incredibly high pressures, which means they require those massive multi-billion-dollar concrete containment domes.
Right, those huge cooling towers and domes you always see in pictures.
Exactly.
Yeah.
And that's to ensure safety in case of a pressure breach.
Mm.
But Oklo's Aurora is a fast reactor.
Okay.
It uses liquid metal cooling or heat pipes, and it operates at atmospheric pressure.
Oh. So because it's not highly pressurized, you don't need to build this bespoke concrete fortress, which strips away years of construction time.
Precisely.
Huh.
The physics inherently simplifies the engineering. Furthermore, The Groves facility is an isotope facility, not a commercial power reactor plugging into a grid.
Got it.
It's smaller and designed for a different application, but the core physics of achieving that self-sustaining chain reaction are exactly the same.
Okay.
And by leveraging existing infrastructure and data from the Idaho National Lab, they were able to accelerate the timeline dramatically.
So reaching criticality with the isotope facility is essentially like a car company building a flawless working concept car in just 11 months, just to prove to everyone they have the chops to mass produce the actual sedan by 2028.
That is a perfect analogy. It proves the physics, but more importantly, it proves they can manage the bureaucracy.
Right.
The Nuclear Regulatory Commission, the NRC, is watching this closely. Achieving criticality safely and swiftly sends a vital signal to regulators and, crucially, to future customers that Oklo has the operational discipline to actually execute a project.
And that operational discipline is exactly what they need to de-risk their primary objective,
Yeah.
right? Which is the Aurora INL commercialization, targeted for 2028.
Right.
This 11-month milestone makes that 2028 target look like a legitimate engineering schedule, rather than just a VC pitch deck fantasy.
Exactly. It brings the 2028 target into the realm of the possible, which is a massive step forward.
Yeah.
But, as you noted earlier with the stock price, the broader market remains deeply skeptical.
And that skepticism makes a lot more sense when we look at the competitive landscape and, honestly, what the insiders at Oklo are actually doing with their own money. Because Oklo is not the only company trying to corner this AI energy market.
Not at all.
The report outlines what analysts are calling a tale of two markets in the nuclear sector.
Right. So on one side, you have the profitable legacy operators, companies like Constellation Energy that already own and operate massive traditional nuclear fleets.
Yeah.
They are generating massive cash flows today by signing contracts with data centers.
And on the other side, you have the speculative developers like Oklo. They are deeply unprofitable today, burning hundreds of millions of dollars and rallying purely on the expectation that they will capture future demand.
Exactly.
And that speculative side is getting incredibly crowded. The report mentions X-Energy recently completed an IPO at around $30 a share, bringing heavy capital at their high-temperature gas reactors.
Yeah.
You have Hadron Energy marketing their Halo microreactor explicitly for behind-the-meter data center use. I mean, the competitive moat is shrinking fast.
The technological race is fierce, but the supply chain race might be even more brutal.
Oh, interesting.
Yeah, you see this with companies like Centrus Energy. Oklo's fast reactors require a specific type of fuel called HALEU, high-assay, low-enriched uranium.
Okay, let's explain why that matters, because this seems like a huge bottleneck. Traditional reactors use uranium enriched to about 5%, right?
Correct.
But HALEU is enriched between 5% and 20%.
Right.
Why does Oklo need that higher concentration?
Because energy density dictates refueling schedules.
Okay.
If you want to drop a microreactor behind a data center and have it run continuously for years without needing to be shut down and refueled, you need a more energy-dense fuel.
That makes sense.
Yeah, HALEU allows for those extended life cycles. The problem is the commercial supply chain for HALEU is practically non-existent outside of Russia.
Wow. So Oklo isn't just trying to invent a new reactor, they are trying to scale a technology that relies on a specialized fuel supply chain that basically is still being built from scratch domestically.
Exactly, and that layers supply chain risk on top of execution risk.
Right.
Which brings us to an important question regarding internal sentiment.
Yeah.
If the competition is this fierce and the supply chain is this nascent, how confident are the people actually running Oklo?
Well, if we look at the insider trading data from the report, the answer seems to be not very confident at all.
Right.
Because the report highlights zero open market purchases by insiders. Not a single executive or board member has bought shares on the open market recently. However, there have been 41 open market insider sales, totaling over 1.4 million shares dumped onto the market.
Now, context is critical when analyzing insider selling.
Sure.
Many of these transactions are likely executed under 10b5-1 trading plans.
Right, the automatic scheduled sale.
Exactly. When a company goes public, early employees and executives naturally want to diversify their personal wealth.
Yeah, you don't want all your eggs in one basket.
Right. So they lock in predetermined sales schedules so they aren't accused of trading on non-public information. Insider selling doesn't automatically mean the C-suite thinks the company is doomed.
I understand the mechanics of diversification, but wait, hold on. Lockup expirations are one thing. Zero insider buys when your stock is trading at a 40% discount is another entirely.
It's a fair point.
If the leadership team truly believes in their 2028 commercialization target, and they know they just proved they can reach criticality in 11 months, why wouldn't executives be scooping up shares at $39?
Yeah.
Because if you know the tech works, $39 is a steal. The fact that insiders are dumping over 1 million shares and absolutely no one inside the house is buying, doesn't that suggest that the people inside the house are worried about competitors like X Energy eating their lunch?
It is undeniably terrible optics, and it absolutely contributes to the heavy near-term bearish sentiment we are seeing in the market.
Yeah.
When you combine that lack of internal conviction with external macroeconomic fears, you get a depressed stock price.
Right.
For example, the broader market is suddenly realizing that AI data center expansion isn't a guarantee. We are seeing data center moratoriums popping up globally.
Right, I read about that. Local municipalities in places like Virginia or Ireland are literally putting a freeze on new data center construction because these facilities are threatening to just brown out local residential grids and drain local water supplies.
Which ironically proves Oklo's thesis.
Right.
The grid cannot handle AI, which is why Oklo's behind-the-meter off-grid solution is so necessary.
Yeah, that makes sense.
But in the short term, if those local moratoriums slow down the overall pace of AI infrastructure spending, the immediate demand for Oklo's product gets delayed.
Okay, so we have a heavily funded company burning massive amounts of cash, facing intense new competitors, constrained by a nascent HLEU fuel supply chain, with insiders selling heavily and macro fears slowing down their target customers.
It's a lot.
It is a lot. It's easy to see why the stock is below its 200-day moving average. But, and this is a massive but, the report also lays out a very specific roadmap for Oklo to completely flip this narrative.
Yes, we need to examine the catalyst stack.
Yeah.
What are the specific, tangible events that could re-rate this stock from a speculative, high-risk bet into a premium infrastructure valuation?
Well, let's start with the federal government. The Department of Energy, the DOE, has launched a massive $50 billion nuclear value chain initiative.
Mm-hmm.
$50 billion. I mean, that is the kind of capital that reshapes entire industries.
Absolutely. The report notes that the DOE recently selected 5 initial contenders out of 28 applications across 26 states.
Okay.
While the data doesn't confirm if Oklo made that final cut of 5, we do know that 5 states have already signed memorandums of understanding for potential hosting agreements with Oklo.
Right. So if Oklo can secure a piece of that federal pie, whether that is direct grant funding or cost sharing for the CapEx, or simply just access to secure federal sites to streamline construction, it fundamentally alters their risk profile.
Federal backing in the nuclear space is the ultimate risk mitigator.
Yeah.
It tells the private markets that the U.S. government views this specific technology as a matter of national energy security.
Wow.
But as influential as the DOE is, there is a commercial catalyst that is infinitely more powerful for Oklo's stock price.
The PPA, the power purchase agreement.
Yes. A binding PPA with a credit-worthy hyperscale data center operator, think an Amazon, a Google, or a Microsoft, is the holy grail.
Let's explain why a PPA is so transformational, because it's not just a handshake agreement to buy power.
No, not at all. A PPA is a highly structured long-term legal contract.
Okay.
The customer agrees to purchase the electricity generated by the reactor at a predetermined price for a set number of years, usually a decade or more.
Wow.
And they agree to this before the reactor is even fully constructed.
Right. And because that contract is with a massive creditworthy tech giant, Oklo can literally take that piece of paper to a bank and use it as collateral to secure traditional debt financing for the construction costs.
Exactly. It makes the project bankable.
Bankable, right.
Without a PPA, Oklo has to fund that $500 million CapEx by either burning their cash reserves or issuing more equity, which dilutes current shareholders.
Yeah.
With a PPA, they can transition to project finance.
Right.
It validates their commercial model entirely.
It's proof of concept for the business, not just the science.
Yes. If a blue-chip tech company signs that contract, they're telling the global market, we have done deep, exhausting due diligence on Oklo's physics, and we are willing to stake the future of our AI infrastructure on it working.
It instantly graduates them from being a speculative science project into a bankable, recurring revenue utility.
Precisely.
Which leads us perfectly into what the research report outlines as the blue sky scenario for 2028 to 2031.
But before we detail this, we must explicitly state a blue sky scenario is an optimistic modeling condition.
Of course.
It relies on a stack of catalysts aligning perfectly. It is not a prediction, and it is not a guarantee.
Understood. But in this optimized timeline, Oklo successfully navigates the NRC licensing process for the Aurora INL commercial reactor, basically proving that the speed of their 11-month growth facility wasn't a fluke.
Right.
They actually hit that commercialization target by 2028.
Concurrently, they secure those binding PPAs with major AI data center operators.
Okay.
They receive substantial support from the DOE's $50 billion initiative, which drastically offsets their capital expenditure.
And because they're currently sitting on $1.6 billion in cash, they managed to fund this entire brutal demonstration phase without ever having to dilute their shareholders by issuing more stock.
Right.
In this world, by 2031, Oklo has a first-mover advantage with an NRC-licensed fast reactor, allowing them to rapidly copy and paste that design across data centers nationwide.
It is the absolute pinnacle of the nuclear renaissance thesis.
Yeah.
But we must weigh the blue sky against the storm clouds. The primary thesis breaker, the single biggest risk to this entire company, is regulatory friction with the NRC.
Because the NRC is entirely accustomed to regulating traditional massive light water reactors.
Exactly. Oklo isn't just asking for a permit. They are essentially forcing the regulator to learn how to regulate an entirely new category of fast reactor technology.
Wow, yeah.
If the NRC demands major unforeseen design modifications, or if the review period simply drags on in bureaucratic limbo, that 2028 target is dead.
And if 2028 becomes 2030 or 2033, that $1.6 billion cash pile suddenly looks terrifyingly small.
Very small.
Because the burn rate continues, they don't have revenue to offset it, and they are forced to go back to the market to raise capital when their stock is deeply depressed, resulting in massive shareholder dilution.
So what does this all mean for the listener tracking this space? When you synthesize the pristine balance sheet, the fast reactor physics, the heavy insider selling, and the macro AI energy crisis, Oklo represents a state of perfectly balanced high-stakes risk and reward.
So what does this all mean? I mean, it sounds like until they sign a binding contract with a hyperscaler for a PPA, they are essentially a really well-funded, brilliant, speculative bet.
That's a fair set.
They have genuine, undeniable progress. You cannot fake $1.6 billion in the bank, and you cannot fake a nuclear reactor reaching criticality in 11 months.
No, you can't.
But that technical progress is going head-to-head with terrifying execution, supply chain, and regulatory uncertainty over the next 36 months.
Right. The engineering is rapidly proving itself, but the commercial validation is still pending.
So to wrap up today's deep dive, Oklo is positioning itself as the critical early mover in a multi-decade structural trend, solving the physical energy bottleneck of artificial intelligence. The market is discounting them heavily today because building a commercial nuclear reactor is notoriously difficult and plagued by delays.
Yeah.
Yet they possess a cash runway that makes them largely immune to the typical startup death spiral. And they have proven an ability to execute physical milestones at a speed the industry has rarely seen.
They are, in many ways, the ultimate litmus test for the entire advanced nuclear sector.
Yeah, they really are.
Can nimble private innovation move fast enough to solve the AI power crisis while still satisfying the rigorous, uncompromising safety demands of federal regulators?
And that tension leaves us with a final thought to ponder on your own as we close out today's deep dive. We know that the expansion of artificial intelligence requires an unfathomable amount of clean, firm 24/7 power. But if the future of AI truly hinges on finding enough of that energy, will the ultimate winners in this nuclear renaissance be the companies with the most brilliant, groundbreaking reactor physics, or simply the ones who figure out how to navigate the labyrinth of government regulations the fastest?